Well, hello, everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me today is T3 Live's JR Romero. JR is a trader and the moderator of T3 Live's Newsbeat virtual trading floor. Hi, JR. Thanks so much for joining me today.
Thank you, Greta.
All right, so first, introduce yourself for the audience so everyone can get to know who you are and who you are as a trader. So kind of the Cliff Notes version, how you got into trading, how long you've been trading, how you found T3, what you do with T3, etc.
Well, thank you for having me first. It's a pleasure to be talking to you again.
Yeah.
It's always nice to do a Q&A with you and the audience. I've been involved in the market since the late 90s. A good friend of mine was a day trader, and I think he planted the seed. And I've been involved in markets ever since, trading full-time for a very, very long time now. And I found T3. I was running helping run a room as a moderator, and I really wanted a room with a little bit more of a focus on news flow and relationship-based trading. So I joined Newsbeat and began actually running the room shortly thereafter, and it's been fantastic. I love being part of T3. I love the family, the T3 family, and it's been a real ride.
So for all of those in the audience who've been with us here on this program before, you know this, but for anyone new, this is both a conversation between JR and myself, but also a conversation between you guys and JR. So I have put a comment in the live chat just so you guys can see where that's at to submit your questions. So submit all your questions for JR there, and then in the second half of this event, I'll be sure to ask him all of those so we can get them all answered. So go ahead and let those pile up as him and I talk here, and then we'll be answering them. Okay, JR, so you say you've been trading full-time for a long time. So describe your personal trading style and how you developed your own strategy.
Sure. So I started trading with futures traders, and there was a very strong emphasis on macro-related information, and a very, very strong emphasis on implementing strategies that revolved around the price cycle. So I was raised as a Wyckoff technician, and everything I do really revolves around the price cycles in the market. Understanding the difference between trading ranges, consolidations, markups, markdowns, shakeouts, and so on. So I take a strong approach to technical analysis through that lens, and really pay a lot of attention to what's happening in terms of sector strength, sentiment, and relationships in order to give me an extra edge in the market.
Okay. So when it comes to, your daily picking of stocks to day trade, also, you do swing trade as well or mostly day trade?
Both.
Okay. So when you're choosing those stocks, walk me through your personal process in picking which names are right for you on a day-to-day basis.
Sure. So I like to look at names that are behaving with particular relative strength or weakness to the market, and are at inflection points where they're about to distinguish themselves and do something special, right? Either to the upside or downside. And then I look at the relative group, whether it be tech, energy, or whatever else, the sentiment around that particular sector and what the market is doing. And then once I've isolated a set of parameters I'm looking for, usually price related, I really focus on that and try to milk that name for all it's worth, either intraday or on a swing.
Okay. So you said when you joined T3, you were looking for a room that gave you more of a news flow focus, and you got that, and now you're the leader of that room. Describe how your trading uses news flow and that type of analysis in addition to technical analysis on a daily basis.
Sure. So we follow currencies and futures very, very closely in the room. We pay special attention to currencies and the S&P 500, the futures, and also watch gold and crude very carefully. And we typically like to follow the correlations and those instruments to give us an extra edge in how we're trading. And then as far as news flow is concerned, we like to attack uh, we like to attack news that really triggers already a pre-existing sentiment already out there in the market. So, for example, say Qualcomm is really beaten up, and all of a sudden there's a there's a new Apple opportunity, and it's catching a lot of shorts off guard. That's typically what the kind of news flow will go after, right? So
Mm-hmm.
news flow that really catches people off guard or changes sentiment dramatically, right? And really is able to leverage that market inefficiency of what's priced into a name. That is the type of news flow we really like to go after.
Okay. So when it comes to on the technical side, what would you say your favorite indicators are to use?
Price. Price is the
Okay.
most important indicator. Al
Mm-hmm.
Brooks, price action guru, always says price is truth. Price is the only real-time indicator that matters in the market. Of course, there's volume, which is I know this is not terribly exciting, right?
No, no,
You have a
no.
guy online to tell you about his secret sauce, and he says price and volume. Probably not what people want to hear, but the truth is, if you want real time, you want reality, price and volume really are the two most important indicators you can use. I use a lot of volume profile,
Mm-hmm.
and I use moving averages intraday and daily, but price action coupled with tape reading and order book reading is really what, in my opinion, gives a lot of traders an edge. Certainly gives me an edge.
Hmm. Okay, so you mentioned, somebody wants to hear kind of your secret sauce. What makes you different? What sets you apart, would you say, from other traders?
I think that what makes a trader successful in the markets, again, not sexy, is the consistent management of risk
Mm-hmm.
and consistent management of money.
Mm-hmm.
Oftentimes in the room, uh, many people will take the same trade. Traders who manage their risk and manage money correctly in the trade will have a very efficiently executed trade that makes money. Traders who don't, maybe will take that same trade idea, will end up, losing or breaking even. So that is a huge edge. And it's one of those things that not a lot of people teach well. You take a lot of trading courses and you're taught about signals and patterns and how to recognize those. But very few people actually teach you how to manage money correctly during a trade, how to hedge risk, where to take off, where to put on. And that is something that requires not only really good technical analysis skills,
Mm-hmm.
but also a feel for the market and a very sound psychology. And that takes time to develop. So I think that gives me a big edge. And I think being able to read the market correctly with a lot of confidence is a big edge, right? A lot of traders, many years into their trading career, still take trades because it fits a pattern they've learned, but they're not trading it with a lot of confidence. They're not, they don't have like a really good feel for the market yet.
Mm-hmm.
And having that confidence and seeing the market in the way that gives you an edge, I think is really, really important. You can have three different traders. They'll all look at the same chart. You know, one will go long, one will go short, another one will sit it out. And, two of those guys may have profitable trades, but they're seeing the market really differently. There's no right or wrong. It's just a matter of you seeing you seeing the market through a prism that makes sense for your game plan and your particular trading plan. And if you can do that consistently well, you're going to succeed. Most traders I know who manage risk well, manage money well, and have that confidence end up doing well. But ultimately, seeing the market through your own prism and seeing it well and being confident in that is what's going to give you a giant edge. There's an army of programmers out there whose
Mm-hmm.
only job is to trick traders, right? They know what especially retail. They
Mm-hmm.
like retail traders. A lot of them are just cannon fodder. They know how retail traders think, and their job is to take advantage of like herd mentality, right? So you have to have a more individual a more individual view of the market and think for yourself. And in doing that, I think you get a big edge. You know.
Mm-hmm. All right, that's great. Okay, JR, so this is typically my introduction question for traders who've been on this program before. We are halfway through the week. It is end of day Wednesday. So, how would you grade your week of trading so far on your typical school grading scale, an A to an
Is pass an option?
F?
Uh,
And this doesn't have to be based on profit or P&L or anything. A lot of traders base this grade on whether or not they've followed their plan correctly and done what their strategy tells them to do. So
I've done a very good job in terms of reading the market, read the
mm-hmm.
market very well, managed risk well, and I think I was in the right trades, in the right
Okay.
names for the right reason. So in that regard, I think I did pretty well. So let's call it a B plus.
Okay, great.
I like
Okay,
that. All right.
all right. So today, as a news flow trader, today may have been a big day for you. It was a big news day for the market. August CPI being released this morning at 8:30 a.m. Eastern. How do you prepare for a binary event like today?
Uh, the best thing, so the best thing for me to do is to just turn everybody off. Uh,
Okay.
there's an army of BS artists, talking heads out there who get
Mm-hmm.
paid to give you their opinion, and they're right 50% of the time. Okay,
Mm-hmm.
uh, Tom Lee is right 50% of the time. Mike Wilson is right 50% of the time.
Mm-hmm.
As a trader, I need to be able to turn all that off and just look at what the chart is saying, look at what the order flow is saying. And the most important thing in terms of preparation is just having all my levels mapped out and having a very clear game plan that's very much mapped out already. So if a certain level breaks and holds, then there's a game plan for that. If a certain structure breaks, there's a game plan for that. So it's very iterative and procedural, and that's what keeps me focused. Just turning off all the noise, Jim
Mm-hmm.
Cramer's of the world, and even other traders. It's really hard to not let other traders who you respect influence you. But one of the biggest skills I've developed is to just turn all that off and try to look at the chart as objectively as possible.
Hmm. Great. Oh, we seem to have lost your. Yeah, there, you're back. Okay.
Sorry about
So
that.
that's okay. The headline CPI came in a little hotter than expected on an annual basis. The core CPI was a little hotter than expected on a monthly basis. And the reaction from the market and futures was up and down. There was a lot of whipsawing back and forth. And then also
Mhm.
throughout the day, we saw a lot of up and down. The S&P and the NASDAQ ending higher, the Dow falling. How would you describe the market reaction to that report? Was it kind of as you expected or different?
So I like to take the broad view. We've been living on easy street for over a decade, right? Since
Mm-hmm.
2009, we've had all this quantitative easing coming into
Yeah.
the market and low interest rates. And I think we're just in a very long, drawn out process of just untangling all of that.
Mm.
And so the market, like 5 years ago, if you ask your average equity trader what they thought about the 2 year or the 10 year or bonds, it just wasn't a thing that a lot of day traders talked about in the world of equities, even though it's a
Right.
really much bigger market and much more important.
Mm-hmm.
And so I think we're going to be in a very long, drawn out process. The Fed keeps on kicking the can, and you need a Powellese to English translator every time Jerome Powell gets on and talks, right? Because it's hard to decipher what he's trying to say sometimes. And I think that's
Mm-hmm.
very much on purpose. I think there's no script for what's going on, and we're being hit with a bunch of different things going on at once. Where we're uh, going through a major demographic shift in the United States. We're in a post-pandemic economy. We have a
Mm-hmm.
major worker shortage that is going to severely affect our GDP unless we like majorly uh, increase our productivity per worker. So there's a
Mm-hmm.
lot of challenges going on simultaneously. Some are deflationary, some are inflationary. And in terms
Mm-hmm.
of economic cross currents, I think it's causing a lot of uncertainty. And I don't think anyone has an answer to what's going on because there's no script. So when the smartest people in the world you just continue to step on rakes and be consistently wrong,
Mm.
I just step back and I say, you know what, that's not my job. Uh, I'm really good at understanding supply and demand, at
Mhm.
understanding the price cycle, at understanding where the auction is and where price is most likely to move. And I just focus on that because if the smartest guys in the world can't figure this out, I think it's just a complete waste of time to try to understand the place we're in history. I think it's really complex.
Mm.
So I try to think about it, uh, as little as I can during trading hours. After hours, it fascinates me, and I talk a lot about it with my friends. But
Mm.
as far as my job is concerned, I try not to let it obfuscate my trading bias.
Okay. So, with the futures, whipping back and forth after the release of the report this morning, a lot of traders, do the most of their trading at the open after 9:30 Eastern. So, how did you approach the open this morning following the release of that report pre-market?
Yeah, so I traded it. I traded the report very actively,
Mm-hmm.
and then at the open, basically we were watching the 4520s and and looking for a two-wave corrective through that level, wondering if we were going to, put in a major sign of strength and a retest. And instead, the market came right back to a demand zone around 4505, and that
Mm-hmm.
was our long trigger. So, that's typical type of morning where we have a certain set of contingencies. And if one triggers, then we have a specific context structure and roadmap to follow. If another one triggers, then we have a different type of context structure and roadmap to follow. And, I just let the market tell me what to do.
Hmm.
Um,
You mentioned how you follow more than just the equity market. You're following the crude market, futures, currencies, etc. So economists say that this bump in headline inflation should be temporary, just because it was caused by higher gas prices, over a 10.5% jump in gas prices month to month from July to August. Oil prices, though, are continuing to climb amid supply concerns. Yesterday and earlier today, at the highest levels since, or the highest levels in 10 months. Some analysts say Brent is going to top $100 a barrel by the end of this year again.
yeah,
So,
Goldman made a bold call as well. Yep.
yep. So how do you see that impacting the inflation picture at this point? And do you see it as a problem for the market? Because leading up to today, part of the issue all throughout the past week has been those higher oil prices pressuring equities.
Uh, I think the demographic challenges we have ahead,
Mm-hmm.
and and the complete retooling of the American supply chain away from China is going to be a far graver inflationary pressure
Mm-hmm.
than oil, because oil will fluctuate based on demand and supply, and it
Mm-hmm.
will fluctuate based on economic activity. We can't fluctuate people.
Mm-hmm.
Um, you know, there's how many millions of baby boomers are retiring this year? It's a shocking amount,
Yeah.
and
Mm-hmm.
and our inability to innovate at a pace fast enough to increase productivity to make up for that, not just worker shortage but skill shortage,
Mm-hmm.
is really concerning. I work in several parallel industries as an advisor and consultant, and
Mm-hmm.
there are many data centers in construction, many factories in construction that cannot find master electricians anymore. A lot of those
Right.
guys are retiring, and that is going to put a tremendous pressure not only on wages but also on the ability to produce uh, produce goods and services quickly enough. So I think that may have even graver inflationary pressure on the economy than
Hmm.
um, than the price of oil.
Hmm. All right. So this today was the final piece of inflation data we're going to get before the Fed decision a week from today. CME Group's
Yep.
FedWatch tool still shows 97% of traders expecting no rate hike next week, Fed maintaining the pause that they're in. but then
Yep.
around 40% are expecting maybe another rate hike in November. Where do you fall? And do you think today's CPI data changes anything for the Fed at this point?
I don't think it changes anything for the Fed. I'm in the Jeffrey Gundlach camp. I think he's right about where the Fed is going as far as them easing into 2024. Other than that, I think there's, just based on what I'm reading, a good amount of dissent in terms of the Fed heads and what they want to do. So,
Yeah.
I think it's a toss-up in terms of one more rate hike or not.
All right. So before we get to audience questions, I just want you to describe, you say you let the market tell you what to do on a day-to-day basis. So describe the current sentiment and price action that you're seeing.
Sure. So we're basically stuck in a range between 4,300 and 4,500 in the S&P.
Mm-hmm.
And seasonally, we're in a very difficult month. August and September typically
Yes.
very difficult and volatile months. And so the thing that I try to do most in our room is to really create an awareness of rapid sentiment shift via price action in the markets every day. So we put a lot of emphasis into liquidity traps, stop runs, bull traps, bear traps, times and places during the day where it's very likely that we're going to have market makers run stops, flush out the longs, and trap the bears. Like today, for example, around 3 o'clock, we had a falling wedge snapback that failed, put in a lower high into its second bounce attempt. And I told the room, I said, guys, be careful here. This looks like a bull trap. Watch the level exactly. I said, watch the break of 45.20, because if that level breaks, they're going to run all the stops through 45.20, and we're likely going to go back and retest liquidity around 45.05. So in this type of environment where you have a bit of a sentiment shift, earlier this year it was buy the dip every time. Right now we're selling rips, buying dips. And so one of the things I see as my primary job is to really help traders see where the traps in the market are so they can develop a better market awareness. My mentor used to call it a nose for the market, right? Just good old fashioned tape reading and market structure reading skills, so that in a more range bound market, you can see traps before they get you.
Okay, let's get to some audience questions and then come back to mine in a little bit. Our first question comes from Lee. He said, "Hi JR, can you share your experience on moving past the emotional resistance associated with closing a losing trade to always using stop loss orders? What type of mindset shift is needed to successfully make this risk management transition?"
So as a novice trader, I was constantly obsessed with not being wrong. And one of the things that really helped me was my mentor, who said, listen, your job is to be wrong for a living. Okay. Your job isn't to be right for a living. Your job is to be wrong for a living, not stay wrong for a living. So you have to acknowledge when you're wrong and cut your losses quickly. That takes a lot of effort at first, and then it's something that you eventually get conditioned to. I think what really helps a lot of traders is when they start seeing a record of success, right? When they start building a track record and start realizing that if they cut their losers properly, and people say cut your losers quickly, I think that's not a good expression. You need to cut your losers properly at the right time for the right reason. When you start doing that and you start letting winners work and you build a track record, I think in terms of loss aversion, it becomes a lot easier to just take your loss properly, because you start to realize and you start to know subconsciously that there's more winners coming. And if you keep on doing the right thing for the right reasons, you're going to be able to take a loss as well. And that's a big shift that most traders go through. And so, now I'll take, if I'm scalping actively during the day, I'll take 10, 15 losses in a day. But if your batting average is correct and your win ratio is correct and your trading efficiency numbers are good, then it's really not going to be something that really psychologically affects you in such a negative way. I mean, it's never fun to take a loss, but it's just part of the business we're in.
Yeah, totally. Building on that, do you use like a set percent stop loss to choose your stops, or you choosing stops individually on each stock based on how the stock is performing?
I set my stop based on technical levels. So if a trade idea stops working, it'll be based on a technical level. And then based on my conviction, I typically use 3 or 4 tier sizes. So I use a fifth, quarter, third, half, and a full, typically, and based on that, like for example, when the day started today, I was tearing down to a fifth my size till I got a good handle on the market. And then when the market is in a clear uptrend or clear downtrend, breakdown, breakout, or trading very like in a channel over the daily 21, over the daily, whatever fast moving average you're using, doesn't matter to me. The exponential 8, the 5 SMA. Whenever all your moving averages are trending nicely and you're in a clearly defined trend, that's the time to tier to full size and manage risk accordingly. I do a lot of management in trades that are working. So my philosophy is this: like you should work really hard to manage trades in terms of money management, but like work hard on the trades that are working. So if you build a position and you have a trade that's working, like I'll manage that trade. I'll try to squeeze as much out of it as I can. If a trade isn't working and I'm tiered in on a quarter or a fifth of my risk and it doesn't work, it's a paper cut. If I plant a seed in the soil on a small risk and start building that position as it starts to work, then I'll hit a nice couple of home runs a day, and that's how I make my living. So when I'm wrong, I'm try to be wrong small. When I'm right, I really work on that trade, work on managing money in that trade.
When you say you're managing a trade that's working, are you slowly adding to that trade over time if you see fit? You're trimming and trailing on the way up or down, whether it be a long or a short. How are you actively managing a trade?
It depends on the type of market we're in, right? So if we're in a range bound market after, like, say, a big flush down, and we're between two clearly defined ranges, I'll scale in and out of trades depending on where we are within the range. If we're in a trending market, I'll add on pullbacks, trim on pops, and stuff like that. It just really depends. Depends on what phase of the market we're in.
Right. All right. Our next audience question comes from Franklin. He asked, how circumstantial is it to consider strategy decay in regards to the liquidation of retail investors due to herd behavior?
I'm not smart enough to answer that question on the first strike. Can you repeat the question?
Yeah. How circumstantial is it to consider strategy decay in regards to the liquidation of retail investors due to herd behavior? So I think, like we saw lots of retail
stop working because many people are using it.
Yes, I think so. Yeah.
Okay. All right. So look, people use strategy when they mean setup, right? A strategy is a combination of risk management, money management, stock and sector selection across multiple timeframes. That's what a strategy is, right? Saying I buy bull flag continuation patterns isn't a strategy. It's just a setup within a strategy. So I think there's a lot of confusion, especially in the retail world. And what happens is people play those strategies in a complete vacuum. They're like, oh, JR, I found a beautiful inside bar breakout here in Tesla, and I'm looking at RSI, and it's literally going through the stratosphere. Volume is climactic. Your you're outside a value area, you're completely overbought, and you're into a secondary resistance pivot. And I'm thinking to myself, like, okay, you know, there's probably a programmer in Bangladesh somewhere who literally wrote an algorithm to fake this trade. You know what I mean?
Mm-hmm.
So your your strategy has to be yours. You have to think completely outside the box to be a trader, in my opinion. You have to be an individual. You have to figure it out for yourself.
Mm-hmm.
It doesn't mean that you don't get a very solid understanding of understanding how bar charts and candlestick charts work, understanding how to properly trade a bull flag or a falling wedge or a rising wedge or a morning star reversal or whatever else. Those themselves are not strategies, right? A strategy is a much more wider encompassing um, uh, thing. So I think that the question, uh, the way most people are thinking about it is specific types of setups, and I think most of those setups fail because, unfortunately, I think a lot of retail retail traders are taught how to trade incorrectly and are taught to trade like everyone else, right? There's no magic bullet in the market. If there was a bad magic bullet, it would stop working immediately, right? Because everyone would be trying it. So I think the premise of the question is a little faulty, and I think the way you immunize yourself against falling into those traps is to really think for yourself as a trader and view the market through your own prism.
Yeah. Great. And he said, yes, you were answering the correct questions. You did understand correctly what he was asking. Okay. Ryan asked, aside from CPI, what are some big binary events that you like to trade?
I like to trade the rate announcement.
Okay.
I love it. It's
Yeah,
we literally trade every phrase. It's super fun.
I know. How, okay. So like the CPI this morning came out at 8:30 a.m. Eastern, about an hour before the market opens. So you get to see, a little bit of what the market's thinking before you get to the open. This morning was a little back and forth, but you get kind of the sentiment there. When you have something like the Fed decision, which is happening a week from today, coming out at 2 p.m. Eastern, and then you have Jerome Powell talking at 2:30 p.m. Eastern, how different are those trading days when you have that midday big news happening from your typical binary event that happens before the market opens?
Yeah, so when that happens, I really like to see what the daily expected moves are, where
Mm-hmm.
the call walls and put walls are in terms of the options market.
Mm-hmm.
And then I like to take a really good look at where the prior levels of liquidity are in the market, demand zones, supply zones, where price is most likely going to want to go. And then based on that, right, we just pay really close attention to the keywords because that's what the robots are playing, right? They'll
Mm-hmm.
literally, they'll like pick up on a conjunction or a change of tone. So when
Mm-hmm.
Jerome Powell says, we remain committed to whatever quantitative tightening or whatever it is. However, you know, uh, our approach remains data dependent. You'll literally see like an inflection point in price action and a pop higher or a pop lower. So I just love that stuff. I think it's fascinating how quick the market reacts to the tone, syntax, and language of Powell as he's speaking.
Yeah. I've noticed over the past few Fed decisions, especially this cycle of hiking versus maybe previous cycles of hiking or lowering, that, you get the reaction to the decision. It's kind of muted. It's whatever. Everyone's waiting for Powell, like you said, for those inflection points and like the little things he's saying that might hint toward,
Mhm.
the future. Do you feel like the first move off the Fed decision is not indicative of where things might settle? I feel like last Fed decision, the market popped higher when the decision came out, and then Powell came out and spoke, and the
Yeah.
market ended lower that day.
We always
So
fade that first move. It's like
yeah,
a gimme. Yeah,
okay.
it's
Do you feel like it's
funny how that works.
predictable as a trader to kind of know what's going to
Oof,
happen
the
on
word
that
predict.
first move?
That's the P word in trading. It's a pretty reliable move. Like fading the initial the initial impulse move is
Uh-huh.
it's been really reliable.
Hmm. Okay. We have another question from Franklin. He asked, how imperative is it to profile key players, trend, and volume in markets?
By key players, I assume he means equity instruments like Apple, Tesla.
I
Is
think
that
so. Mm-hmm.
so we have I have a strong emphasis intraday on the Nasdaq generals, right? They move the market.
Mm-hmm.
Apple, Tesla, Microsoft, Meta, Google, Nvidia, and then
Mm-hmm.
I've got a lot of important down names on my watch list all day. I'm constantly watching the oils, the industrials. So definitely important to look at the sectors and key levels for
Okay.
sure.
Eddie asks, do you prefer high probability, low reward trades or low probability, high reward trades? Mainly talking about options if you trade any.
I use options more as a hedging instrument for
Okay.
trades I'm already in intraday, and I also I um I I like options for a lot of overnight swings, so I
Mm-hmm.
don't leave a lot of capital in the market overnight. So I constantly talk about risk reward probability versus just risk and reward as a
Mm-hmm.
kind of a third dimension to the risk reward equation. Uh, I think money management is the key to having your P&L cake and eating it too. So
Mm-hmm.
managing trades properly so you can enter into a low probability trade on lower risk and building a position so that when you hit that low probability home run on low risk, you end up getting a massive reward is one of my jobs.
Okay. Franklin has a follow-up on his strategy decay question. He said, for a clear understanding, strategy decay is faulty in its premise when not using an autonomous strategy.
I'm sorry. Franklin, you got to speak English, man.
All right, so let's talk about your personal strategy basis a little bit more. You
Mm-hmm.
talk about how you have you would say a more clear understanding of how kind of all the markets connect than most traders. You look at not just the equity market, but the bond market, the futures market, the commodities market, the currency market, etc. How do you feel that makes you a better trader than someone who, say, only looks at technical charts of the SPY and the Qs?
I don't look at all those things all the time. I look at
Right, but
them
you
when
have
they
the
matter.
understanding, the basis of understanding.
Yeah, no, for sure. So, for example, if I'm looking to trade a gold related name that day, like
Mm-hmm.
watching the dollar is going to be really important, right? There's
Mm-hmm.
times where the dollar is really, really strongly inversely correlated to the Nasdaq,
Mm-hmm.
and you can anticipate breakouts in, in in the Nasdaq with a lot more clarity and effectiveness if you're mapping out key levels in the DXY, for example,
Mm-hmm.
right? So the, looking at the right things at the right time can give you a really nice edge.
Okay. All right. So you've talked about how, the current action you're seeing is more sideways than previously. What stocks would you say you're bullish on right now and why?
What stocks am I bullish on?
Or sectors if there's not any specific stocks. Or if there's nothing,
So
why are you not bullish on anything?
so here's the thing. I don't care whether they go up and down. I just
Mm-hmm.
want them to go up and down a lot. So,
Okay.
like Uber, Carvana, Tesla, Nvidia, I just want them to move. So I want to catch them in a compressed state and then
Mm-hmm.
catch that a wide expansive move that's very volatile. So I like to transition. I like to catch transitions from a narrow state to a wide state, from a area of equilibrium to an area of momentum or a stage of momentum where you see a wide degree of volatility. So you could say I'm bullish on volatile names. And but I'm outside of my swing trading, I'm not directional, and I think that the market right now is very expensive, uh, especially given some of the, if you look at uh, the market in terms of a um, earnings per share,
Mm-hmm.
it's not. I don't know how we can maintain a big bullish move in the market in the next year or two. I think we're very likely bound for a few years of consolidation. You know,
Mm-hmm.
this has happened many times before. We came out of a 10 to 15-year bull market. Sometimes markets consolidate for years on end. So my focus right now isn't to try uh, to catch really nice bullish trending runs. My primary goal in the market right now, given what I think it's doing, is to
Mm-hmm.
capture as much volatility as I can within that range as possible. So I focus on names that are wildly volatile, like your Teslas, your Nvidias, your Carvanas. I mean, it's a ridiculous name. They sell cars out of a vending machine, for crying out loud. But the stock really moves.
Mm-hmm. I mean, okay, you mentioned
So
Tesla. The stock moves a lot. Stock moving a lot this week after the analyst upgrade over the
yeah,
weekend. Have you played Tesla at all this week? And if so, what's been your strategy for that stock?
yeah. So Tesla, we really did very well trading Tesla on, was it Monday? It's
Yeah, Monday was
Wednesday.
the
Yeah. So
big move. Mm-hmm.
yeah. So Monday, I was long calls Tesla. Tesla was bull wedging, right? And then was it Jonas
Yeah, Adam Jonas.
coming out of, yeah, Adam Jonas came out with bullish comments on Tesla. So I was very lucky to be long calls uh, into into the into his note, and then that day we went long Tesla off the open and caught like $9 or $10. I mean, it was a beautiful intraday move, and Tesla's a name we scalp intraday. I don't know, sometimes 5, 6 times, sometimes more.
Mm-hmm.
It moves beautifully as a trading instrument. It's one of my favorites.
Would you say that is a position that one of those positions that works for you, so you actively manage it, you know, on an active basis, on a day-to-day basis?
Yeah, it's one of those instruments that trades well, even when it's not always special. Like sometimes it's just in a cruddy range,
Mm-hmm.
sometimes it's not moving. So I
Mm-hmm.
try to avoid it when it's not doing something amazing. But when
Mm-hmm.
it moves, I mean, it moves in, it's a $270 name that moves $10, $15 a day.
Mm-hmm.
So it's really fun to trade. It moves very well. The spreads are narrow. It respects level. It just there's not much I don't like about it.
What's your current kind of basket of stocks that you like to trade often, like Tesla? What are other ones you like to look at?
Man, we trade a lot of Amazon lately, Nvidia. I've been trading Uber and Zscaler a lot. Let's
Mm-hmm.
see. Uh, CrowdStrike has been an amazing mover. Oracle is a lower beta name, but it just had a really nice move. uh, Unity Software, Uber. I mean, these are good companies, a lot of them, but the stocks have been really volatile. So
Mm-hmm.
if it moves in um, technically analyzable ways, and it has ranges that are tradable, and
Mm-hmm.
it's either breaking out or breaking down, I'm usually all over it.
Some traders have, more of a long bias. Some have more of a short bias. Where do you fall? Do you like to be long? Do you like to be short? Do you not care as long as
I,
the stock is moving?
I mean, I don't know. Sentimentally, I like it when things go up, but I like
Mm-hmm.
intraday, I couldn't care less. Oftentimes, I'll be, long stock, long puts, you know,
Mm-hmm.
or short stock, long calls. Especially if it's in a range, I'll be going in every possible direction. I don't care as long as it moves the way I want it to.
Ryan said, you seem to have it all under control most of the time, but we all have, you've got to be kidding me, trades occasionally, either good or bad. What are some of yours?
You got to be kidding me. Um, So I have execution errors from time to time, and those are annoying.
Mm-hmm.
Um, I don't know. I'm a very low key trader emotionally.
Mm-hmm.
People make fun of me because I hum all day and I forget to mute myself. Um, I, I like, when I catch a nice trend, a nice breakaway gap or a gap and go, I just like
Mm-hmm.
to stay with it till it stops working. And we're in a range bound day like today, I'm just making a little money, catching 50 cents, $1.50, 15, 20 minute scalp, and I'm done with that trade. I don't, um, I learned a long time ago to conserve emotional energy and to
Mm-hmm.
keep my capital powder dry and my mental powder dry. So I don't have a lot of those moments because I don't, if you're going to be a day trader, you're going to be doing this for decades. You can't have
Mm-hmm.
a lot of what the hell moments, you got
Mm-hmm.
to really just mellow out and take it very slow. You got to build your account slowly. You can't your oscillation emotionally. You as a trader you oscillate mentally, physically, emotionally. Your P&L goes up and down. You got to narrow that curve and
Mm-hmm.
just make sure that you're making more money than you're losing, and you're going to be successful. So I don't have a lot of those moments. I try not to.
All right. Tell me then about the best trade you've had this week and what made it go well.
Best trade I had this week. Well, it was nice to come into it was nice to come into Tesla with calls from the
Mm-hmm.
week before because it was a huge gap up. And then let's see, yeah, that Tesla trade was nice. We caught the upside move. We shorted it at the very top of the first leg. We covered. We literally caught the falling wedge snapback back to day highs. That was almost flawlessly executed. So that was nice. I don't know. We have a lot of nice winners. I honestly, I'm kind of blanking out.
Mm-hmm. On a day like that, the Tesla day where you feel like you caught the top, you caught the bottom, you played it perfectly. Uh, how does that feel for you at the end of the trading day? Is it a
I,
confidence
yeah,
booster?
I I just like to hang it up at the end of the day, knowing I did everything I was supposed to do.
Okay.
If it's a red day, you know, um, and I did everything I was supposed to do, I don't know. I play with my kids, help them with their math homework, watch a little Simpsons, and go to bed.
Mm-hmm.
I don't obsess about it. I used to. When I was a
Yeah.
novice trader, man, it was like every single loss was some weird referendum on my ability as a human. You really you got to be careful with that.
Hmm.
That's just
uh,
the job.
for the audience, we're coming up on about under 12 minutes. So just kind of a last call for questions to get those in if anyone has any more questions for JR. So JR, you talked about the best trade, that's the Tesla trade. Tell me about the worst trade you've had this week and what made it go wrong.
I had an execution error. I can't remember what it was. I think it was, yeah, it was Amazon. I thought I had a buy stop in uh, at a key breakout level, and I had a limit order to sell instead.
Mm.
So, I looked down and I'm short 7,500 shares of Amazon, and this thing's like ripping higher a point or two, and
Mhm.
that was very annoying. Very annoying.
Oh man. All right. Ashani asked so you mentioned how every loss used to be kind of a hit on your personal ego. Ashani asked how you got over that.
Uh, when I there's a point where you burn the ships like Cortez. You say, this is what I'm going to do. This is my job. This is a business, and
Mm-hmm.
you either are able to disconnect. That you have to not open that emotional door. You have to not assign that meaning to the loss, and that's done through a very diligent effort after the market closes. analysis, journaling, replaying the day. And when you finally get through that discipline, then you assign a different meaning to the loss. You say to yourself, I did everything I was supposed to do. I had a game plan going into this trade. I did it for the right reasons. I took the right name for the right reasons, and I did everything right, and it didn't work. The problem is many traders don't do the necessary preparation before the market, so they're just chasing candles or price action or FOMOing into stuff. And what's even worse, they don't do the work after the market to assign meaning to that experience after the close. And so they go into the next day completely unsure of themselves, right? If you take a loss but you did everything right, you're going to give yourself the leeway to be right. You're going to give the experience a chance, and so you're going to be able to continue to do the right thing for the right reasons. It's very difficult to continue to do the right thing for the right reasons if you don't know what the right thing is. And so that's where traders fail, and they spiral out of control, and they have this big personal melodrama. And I've been there, done that, got the T-shirt. So
yeah, lots of traders mention that exactly, and I feel like for everyone, it also is just time, just doing things over and over and over again, and learning, what works for you. And strategies aren't just based on, as you mentioned, setups and patterns. They're also based on personality and what works for each trader as a person. You mentioned not being prepared in the pre-market. So what does your pre-market prep on a daily basis look like?
Before I answer that question, can I just say one more thing? Because I just want to add to what you said.
Yes.
And I tell this to newer traders joining the room all the time. When you're just starting to trade, your only job is to learn and preserve capital. Okay? In the first 2 or 3 years, you're probably not going to make a lot of money. Your only job is to not lose a lot of money while you're learning. That's it. People come into the market with these grand expectations. I'm going to be able to pay off my Maserati and my private jet off a $20,000 futures account. That's not going to happen. In most cases, that doesn't happen. So give yourself time to preserve your capital while you learn. Anyways, sorry, what were you saying?
Your pre-market prep, what does that look like for you on a daily basis?
So I'm on Pacific time, so usually around 3:30, 4 o'clock. I like to curate my list of stocks. The most efficient way to do that is to keep track of what names are already in a sequence, right? And those sequences, when a name moves, it usually moves for 3-4 days, sometimes a week. So I just map out those levels. I love momentum continuation. So, an initial breakout of a range, a retest, then a secondary sign of strength. So I try to play that sequence, sometimes through swing trades, sometimes it would come back in the next day, either add to an existing position, start a new one. But it makes it much easier to just be aware of things that are already moving that you're familiar with. And then I look at all the instruments I trade. I have about 100 names in my watch list that I look at every day. And my thumbnails, I got, 30, 35 names that I watch all day long. And then just be really clear on what the levels are in the NASDAQ and the S&Ps. I mean, that's going to dictate the direction of the market. So that's all.
Two more audience questions that kind of go hand in hand. One is, how did you start out as a trader? And the next is, what is the biggest difference in how you trade now compared to when you first started?
So I started out. I had one of my really good friends was a professional day trader in 1999, and I was already involved with the markets, and I saw what he was doing. I saw the kind of money he was making, and that stock, I really my father was very active in the market, so I was already really interested in it, and then slowly, eventually, I got in a position where I was able to trade a desk, and eventually I had enough capital where I could trade on my own. What was the second question?
What's the biggest difference in how you trade now compared to when you were starting?
Um, I always know what I'm looking for.
Mm-hmm.
So, we're a very tight-knit community in the room, and we'll have like fantasy trades we constantly talk about, oh, you know, Amazon through this level. Like there's just things that we're specifically looking for to trigger all the time. And as a trader, I even a chart I haven't seen, I can tell you like four things I'd really like it to do. So when I come in the morning, I'm really sure of what I want to trade. So I'm not reactive. I'm not swinging at every pitch. I'm not sure if this is the right trade or that's the right type of trade. I come in really looking for specific things to happen. And when those things don't happen, I don't really need to get involved,
Hmm.
you know?
No. All right, I'm going to put you on the spot here for our last question. The ARM IPO is tomorrow. You told me before this you didn't have an opinion on it, and then you had an opinion on it. They priced it at
What?
$52 a share.
I
You say
vehemently
you'll
deny that allegation.
you say you'll probably trade it tomorrow. So just give me your thoughts on the IPO. And this is a crowded space when it comes to chip makers. SMH though has been the leader this year, under a lot of pressure lately, but still for the year the largest gain in the ETFs. So what are your thoughts?
Yeah, so with Intel at the top of the channel, if you look at the
Mm-hmm.
daily chart of Intel, it's
Mm-hmm.
rejecting the top of a 3 or 4 month long bull channel. And
Mm-hmm.
with Nvidia struggling to hold for the 450, 449 handle,
Mm-hmm.
I'm wondering if you're going to get a lot of people ringing the register and having a look squirrel type of moment, just
Mm-hmm.
money going into that and coming out of those plays that are already clear winners. They're very crowded trades, right? So
Mm-hmm.
I think it would have been better if they had IPO during the AI craze, because
Mm-hmm.
ARM is not uh, the market participant in AI and GPUs that NVIDIA is, but I still think you might have a little bit of market participant ADD there and some
Mm-hmm.
money coming out of those two names tomorrow. We'll see.
When it comes to IPOs, a lot of IPOs price really high, start there, and then just plummet off of it and kind of never get back.
Mm-hmm.
What are your expectations for this one?
I have no idea.
All right, no predictions from JR for tomorrow morning.
I have
So,
no clue.
all right, well, we'll just have to watch it and see. Finally, what would be your biggest piece of advice for a trader who feels like they're struggling in the current market environment?
Um, okay, so I tell this to my traders all the time. A lot of people have this really strong work ethic and the belief that giving up is a bad thing to do. And so instead of trading intelligently, sizing down, being analytical, and revising whatever it is they're doing, they just double down, hit the gas pedal, and cause more damage. Uh, as a trader, throughout the rest of your career, you're going to have a lot of moments where you have drawdowns, and you need to understand what's happening, what's wrong, and you need to fix it. So
Mm-hmm.
develop that skill while not losing money,
Hmm.
right?
All right.
So that's really important.
All right. JR Romero, thank you so much for joining me for today's discussion. I think it went great. For everyone who's still
Thanks,
with us
Greta.
here live, I've put a comment in the chat for our next event next week on Fed Day. T3 Trading Group senior trader Derek Oldensmith will be back with me to discuss everything that happened on Fed Day after the market closes. So you can go ahead and register for that now. JR, again, thank you for joining me and hope you have a great rest of your evening.